Welcome back. You're watching Market Fatafat on ET Now. Let's continue taking you through stocks that are buzzing in trade. Let's talk about stock that has actually hit a record high level on an intraday basis, and that is Exide Industries. It has actually seen an uptick of as much as 16% at the day's highest point coming in for the stock. The unit is signed in accord with Hyundai as well as Kia for electric vehicle battery manufacturing in India. It's a strategic cooperation with Exide Energy Solutions and is aimed at expanding battery development, production, supply, partnerships in the Indian market. A huge space that is like waiting to be tapped, isn't it, Vinny? And the South Korean automakers are planning to boost their battery localization for their EVs in India, especially focusing on lithium-ion phosphate cells. On back of that, Exide Energy's parent, which is Exide Industries, has seen a record high level today on the back of that particular move. So the fact that they have tied up with South Korean automakers, and they are mainly the other automakers apart from our Indian companies that have a lot of presence in the EV market. So the fact that they've tied up with Exide, it is a game changer coming in for the company. You can see that in the stock price.
Absolutely, you can clearly see it on the stock price. There's no doubt about it, because after the announcement was made, that jump up is 16%.
It took a while actually, because when I was seeing the news, I was very skeptical. Is it Exide Industries that is getting impacted? But then the move, and a spectacular move coming in for the stock.
Making it sure that it is for Exide Industries. Yes. Absolutely. But let's move on, talk about Gail today. Gail is buzzing away in trade, and we have a tactical note that came in from Morgan Stanley. That target price is 254 rupees. What they're saying is Gail is quite at a sweet spot, as India's target is around 2.7 times higher gas demand by 2030, the fastest growing in terms of the fossil fuel in the country. Overall, the global gas glut that is there, intersecting with India's potential to be around a $65 billion in gas infra investments. That's going to be interesting. So a lot of opportunity that comes for Gail. And other than that, the gas is set to actually double in India in the primary energy mix from 6% to 12% by 2030. That's the estimate there. And obviously monetization of assets, chemical upcycle, that equals to doubling in terms of EBITDA by 2027 as well. And no doubt, Gail is seeing an up move today of 4%, almost near the day's highest point as of now as we speak, Sharon.
All right, so that is Gail India for you. But Ankita, let's talk about Vodafone Idea, and why is this stock in focus?
Yes, Vodafone Idea shares are in focus today because, in fact, Vodafone Idea gained early in trade today, and just see the profit booking came in right after that, a sharp downtick, and it is, holding on to those losses, trading with, downtick of 1% right now. But this happened after the telecom operator received an approval from its board of directors to raise 2,075 crore rupees, and they will raise up to, 2,000 crore rupees from Orient Investments, which is an Aditya Birla Group entity. Now, Aditya Birla Group, this will raise the stake for the promoter to 19% from a 17.5% which they hold currently. Now, the company will issue up to 139.5 crore equity shares to Orient Investment at an issue price of 14.87 rupees per share, subject to shareholder approval in the general meeting. Now, the relevant dates for determining the floor price is April the 8th, which is today. That's what the telecom company said in its exchange filing. Also, the company stated that its board has approved an increase of company's authorized share capital from the current 75,000 crore rupees, comprising of 70,000 crore of equity share capital and 5,000 crores of preferential share capital, to 1 lakh crore rupees. Also the company stated that it will seek shareholders' approval at an extraordinary general meeting, which is scheduled for the 8th of May, regarding all of these proposals. And on the back of that, Vodafone Idea is in focus today.
Okay, let's move on and then talk about Nykaa. Nykaa came out with its Q4 updates. A decent update that's come in. The company said that they've witnessed continued momentum in terms of customer acquisition, platform conversion, and user level growth had been healthy in terms of volumes for the company, auto volume growth as well. And BPC vertical, the gross merchandise value in Q4 FY24 is expected to grow at 30%. Net sales value expected to grow over there and mid-20s on a year-on-year basis. The management said that the guidance that they've given is largely in line with what the street was expecting. It was not a major positive surprise, but surely at least that momentum that has continued is quite strong in the BPC segment. The fashion segment is also seeing good momentum in terms of growth, high 20s for fashion segment and GMV. as well as net sales value growth of around mid-20s for the fashion industry, fashion segment for the company. And you know what, the highlight is coming in from Elara in terms of their estimates for the guidance. They said the BPC GMV growth is estimated to be at around 25% in FY24, which is in line with what they were expecting. So yes, interesting in terms to watch out for over there. A good update that is coming from Nykaa. Nothing bad that we could say, but 5% uptick for Nykaa. And finally, I think, you know, it's participating in that up move that we've seen other you know, new age tech companies come in. Nykaa seems like, you know, given the good growth that we're seeing even in the BPC segment and fashion segment, it's coming back.
All right, that's Nykaa for you, which is making a comeback. But Ansh, Union Bank, how is this one looking to you on the news flow that you'll share with us?
So the stock is actually minus 3%, it's trading in negative actually because that quarter-on-quarter growth remained weak as compared to its industry despite being positive. But let's look at the number as well. The total advances of the bank grew by around 1% on quarter-quarter basis to 9 lakh crore, whereas the total deposit of the bank grew by around 4% to 12.2 lakh crore. And the total domestic RAM advances of the bank grew by around 2% on quarter to 4.9 lakh crore. Also, if we see the chart, the stock has actually snapped its 8th session gaining streak and has also given a breakdown from its upward sloping support trend line, indicating negativity in the stock.
Okay, let's move on and bring on board Vinay Rajani as well, joining in with us on the technicals. Vinay, good afternoon and thank you so much for joining in with us now. The first stock that you picked out for us is Maruti Suzuki. When you look at it, that up move has not stopped, right? First, everyone spoke about the 10,000 mark, but 10,000 today, 12,850 levels. What is the view now on Maruti Suzuki?
For having me on the show. So Nifty Auto Index has registered a fresh momentum and all-time high, and Maruti Suzuki has also registered a fresh all-time high today, which is around 12,895. And if you were to look at the daily chart, it is a clear-cut breakout from the flag pattern on the daily chart, which indicates that it is a resumption of an uptrend after small correction. So it looks stronger today. Auto stocks are performing very well, and indices, the auto index as well as the Maruti is hitting new all-time high day by day. So overall, it looks very convincing. And the recent low was placed at 12,300 odd level. So that becomes a strong support, positional support. So till this level holds 12,300, the trend of the stock is likely to remain high, strong only, and it would be better for the traders to keep this stock on a trailing basis, trailing stop loss basis. So that would be a nice strategy. So stock and sector both are looking very strong, and I'm expecting a levels of almost 13,500 in coming weeks. So overall, stock is likely to do well, and 12,300 is a very strong support. With that stop loss, traders can continue to hold on to their long positions.
All right, that is your take coming in on Maruti then, Vinay. But what about Glenmark Pharma, and how is this one looking on the charts to you? Do you think it will also be able to replicate rise that we've seen in Maruti Suzuki, or do you think this will chart its own course?
Glenmark Pharma is outperforming the other pharma stocks. If you were to look at the Nifty Pharma Index, as compared to the Pharma Index, Glenmark is altogether performing differently. It is on its own orbit and marching towards its all-time high. The all-time high for the Glenmark Pharma was registered in 2015, August 2015, and that was around 1125. Right now, stock is trading at 1036. So it is almost 8 to 10% away from its all-time high, and the way it has built up in last couple of weeks and the way it is outperforming volumes, technical or oscillator indicators, all are suggesting that this stock should register a new all-time high, which is beyond 1125. So the stock is showing great amount of resilience and outperformance, and the support for the stock is seen at around 975. So keeping that stop loss in mind, one can continue to hold on the long position. The overall relative setup of Glenmark Pharma as compared to the other pharma stock looks very strong, and 975 becomes the strong support, and I'm expecting this stock to go beyond its previous all-time high, which is around 1125. So yes, it looks good, and one should continue to hold on to the long positions.
Surely keeping an eye out on Glenmark as well, continue to hold the long position, that's the word coming in. But let's move on, talk about Force Motors. This one is buzzing away in trade, 7th consecutive day of gains that we're seeing today. Also, as of now, holding on to gains of almost 5%. This main reason for this is because they had a strong March auto sales update that came in 34% uptick there on a year-on-year basis. 3,248 is what they had seen in terms of units. That's an intraday record high level that First Motors has managed to achieve after such a great set of numbers was there. The total production also increased by 30.2% versus a year ago. Domestic sales rose by 33.8, 34% like I mentioned, while exports saw a sharp jump as well. Obviously a lower base, but that's why a 296% uptick, almost 420 units is what they managed to sell in the March sales auto number. All-time high levels is what it's managing to hold on to, and at one point of time the stock was up almost 10% as well. As of now, part those gains, still managing to hold on to 5% in terms of an uptick, 7th consecutive day of gain for the stock. So yes, that's no stopping over there because the stock has already seen such good returns in the last 1 year as well.
Absolutely. That is all about First Motors, but let's stay with the auto pack then. Vinay, Eicher Motors, another stock that is actually rallying in trade today. It's hit a record high level as well. How are you picturing Eicher Motors on the charts now?
Yeah, so stock has recently surpassed. In fact, in today's session, we have seen that it surpassed the previous swing high, which was around 4,200, and it is sustaining above that. Today's high is 4,300. So from the intraday high, it has come down, but overall picture looks very strong because a sector is performing very well, and stock has hit a new all-time high and surpassed previous resistance of 4,200. So it is a good setup. Technically, it is placed above all important moving averages. Volumes are supporting not only price, but price breakout is accompanied by a jump in volumes. And indicator oscillators on a weekly and monthly charts are also suggesting that this stock should do well because it's a fresh breakout on the chart. So amongst the auto space, I see a clear-cut breakout, a fresh breakout in the Eicher Motor, and this is a typical setup where one can take a fresh entry into the stock. The short-term support for the stock is placed around 4,000. So for traders, 4,000 becomes the strong base, and that can be utilized as a strong stop loss also. So 4,000 should be the stop loss for the short-term trading, and on trailing basis, one should continue to hold on to their long position. As and when you see stock rising by 3-4%, you can trail your stop loss by 3-4% on the upside. That's the best strategy you can have in the setup like Eicher Motors. So looks very strong on the chart, and sector is also doing well. So continue to hold on to the long position.
Alright, so that's the take coming in on Eicher Motors. Let's talk about Bandhan Bank. Definitely this particular stock is in focus. It's the stock of the day. You could say on back of news flow, it fell as much as 9.2% on an intraday basis. The company informed that the MD and CEO and founder Chandrasekhar Ghosh will be retiring on July 9th after nearly a decade at the bank, and post that the stock actually saw a sharp knock. In fact, Jefferies has come out with the news saying the news is a negative surprise given the CEO's recent 3-year reappointment, and also it could be a risk from strategy perspective. Therefore, they've actually downgraded the stock to an underperform, and they've set a target price at around 170 rupees per share, which is actually a 14% cut from the previous target price that they had set for the stock. So yes, Bandhan Bank, on back of the downgrade, the fact that CS Ghosh will be retiring, the stock is in the negative territory now.
Okay, surely keeping an eye on that. But PNB, that's the stock that's in focus and seeing a bit of a fall today as well after its Q4 updates. How are they looking like, Ansh? What is it that didn't excite the street?
So the total advances were by around 11.5% on year-on-year basis and 1.9% quarter-on-quarter basis to 9.85 lakh crore. But it was lower than the guidance that the management had given of 12 to 13% growth. So this was the main reason which didn't excite the market. Whereas the total deposit was up by only 7% on year-on-year basis and 3.5% on quarter basis to 13.7 lakh crore, which was lowest than the most of the peers. The CD ratio declined by around 110 basis point on quarter-on-quarter basis to 72%.
Alright, so that is PNB for you, that is in focus, Vinny. But yes, a lot of these counters from the infra space have been in focus given the fact that you have seen the government thrust coming in on infra space, isn't it? But IRB Infra is a stock in focus, and why?
Absolutely. IRB Infra is in focus today mainly because we have a brokerage note that's coming from CLSA. They're maintaining a buy rating. Obviously, we have all those, boom that is coming on the infra side, so much focus from the government side. That's one of the factors that one should keep an eye out on. But CLSA is highlighting that Q4 obviously was quite eventful in terms of so many catalysts and emerging orders that came in for them. In terms of they won the long pending arbitration also, that was around 1,700 crores. So it's a big amount coming in for the company. That's around 12% of the net worth when you compare it. So huge in terms of an impact there versus NHAI. This was the arbitration that was going on. Obviously, other than that, in terms of they also conclude, there was a second hearing that was there of a case which was there with AV Tollway, which was also cleared out in the month of March. So a lot of positive triggers that are there for them. And other than that, IRB Group has won a lot of assets also that came in. Some 2 assets that they won during this time period as well, showing great potential in terms of the growth that is there that one could see. And what CLSA is saying, they believe that their higher value was something that is validated by the recent purchases of 24% stake in IRB Private in WIT by them, and they believe that that is something interesting that they are keeping an eye out on. They've given a good target price for IRB Infra as well, so let's keep an eye out on IRB Infra on the back of a brokerage note. We've seen it buzzing away today.
Alright, so that's IRB Infra for you, but let's just focus onto the PSU space, especially the PSU railway counter. Then IRCTC, Vinay, one of the stocks that started rallying the last when you talk about the railway pack, 10% up move in the last 3 months. Where you see it headed now?
Yeah, so the setup is quite convincing. If you were to look at the weekly chart, on weekly chart, I can see a breakout from the flag pattern, and follow-up buying can be also observed in this week. So it's a good setup, and the immediate resistance for the stock is placed at 1049, which is the previous swing high. And the stock is quite away from its all-time high. All-time high was at 1217. So it is far from the all-time high, but the setup is quite convincing. The way it has moved in last 2-3 weeks, it is quite convincing. Technically it looks very good. The flag pattern breakout is also there, and within the PSU space and within the railway related stocks, this IRCTC has been outperforming and looks very strong from here as well. So even if you take a long position from this level around 1016, it is likely to give returns in and generate alpha for the trader. So I see a strong support around 960, 970 odd levels. So keeping that stop loss, one can initiate a fresh long positions, and I'm expecting this stock to go beyond 1100 in the coming days. So overall setup is good. PSU as a sector has been outperforming, so that is also supporting. So yes, definitely can be traded long, and the target could be beyond 1100 in coming couple of sessions, we can say.
Okay, let's move on and talk about EMS sector then. And Ankita, why have you picked out all the EMS stocks? Why are they in focus today?
Well, yes, EMS stocks are in focus today, Keynes and Sirma, both of them, because Jefferies has come out with a note on both of them. In fact, Keynes, they've initiated a hold with a target price of 2,900 rupees, and for Sirma, they've initiated a buy with a target price of 640 rupees per share. And they feel that in FY 24-26 estimate, the Indian EMS industry is set to post a 35% plus CAGR led by China Plus One and lower labor costs. Also, Sirma and Keynes their focus on the components is likely to be margin accretive for these companies. Keynes is the only EMS player to foray into the OSAT and the PCB production, and in FY 24-26 estimate, both Sirma and Keynes are likely to post an EPS CAGR at 55 to 60% within RO's CE expansion. Also, they've initiated buy on Sirma, but they are maintaining a hold on Keynes because of its punchy valuations. Both of the stocks are in focus today, but unfortunately, there's profit booking coming in for both the counters. Keynes trading with a downtake of 4.2%, and Sirma is down 1% in trade today.
Okay, let's move on and talk about another Q4 update. We just had a short while ago before we started the show, and it was from Prestige Estate. They managed to see a quarterly sales uptick of around 21% on a year-on-year basis, 4,700 crores approximately. We did see a spike up in the stock, but post that, it gave up those gains. As of now, it's down 0.3%. But overall, when you look at it, collections have seen an improvement, double-digit growth in collections of 26%. They overall have seen the highest ever number in terms of units sold for FY24 as a year overall for them as well. And other than that, they've had the realization is at around 10,410 per square feet in FY24. Overall, they completed around a delivery of 300 projects during FY24. So interesting to watch out for Prestige Estate in terms of the annual sales numbers, which has seen a growth of 63%. So that's for the full year for FY24 as well. And obviously on a quarter-on-quarter basis also the company has managed to see a good growth. So as of now the stock is quite subdued in trade.
Right, a lot of actually operational updates trickling in. On bottom of your screen, Mazagon Dock also has come out with their FY24 turnover, which is coming around 9,400 crore rupees versus 7,827 crore rupees a year ago. A healthy uptick when you see on a year-on-year basis. The stock has actually spiked also after that news. So 3.6% uptick coming in for Mazagon Dock on the fact of that healthy operational performance. But let's put the spotlight then and let's talk about Adani Green in particular, and that particular counter is actually buzzing in trade today. And one of the reasons why the stock is actually buzzing, it's on uptick of as much as 2.5% or so on an intraday basis, holding on to gains about 1.2% or so. The stock is, rather the company has said that they have started the commercial production of wafer and ingots used to make solar power cells. This is what the company, or this is the information that came actually yesterday. And on back of that, the stock is actually gaining for a third consecutive trading session, Vinny. So good run coming in for Adani Green on back of their commercial operations coming in for the solar power cells plants.
Absolutely, but let's move on, talk about Utkarsh Small Finance Bank. Ansh, this is in focus on the back of its Q4 updates.
Stock is in focus on the back of its Q4 update. The stock is up over 1% in trade today. The bank has actually reported gross advances at 18,300 crore, which is up by over 31% on year-on-year basis and 11% on quarterly basis, whereas the deposits have been reported at 17,400 crore, which is up by over 27% on year-on-year basis and 15% on quarter-on-quarter basis. The CASA ratio has also improved by around 50 basis point on quarterly basis. Also, if we see the chart, the stock has been advancing for 7th consecutive session, and it has also surpassed above 50 and 100 DMA, touching 1 month high level on intraday basis.
Alright, so that is Utkarsh Small Finance Bank for you, but let's move on then, Vinay. Let's talk about SAIL. How is this one looking on the charts to you right now?
So this metal index has been doing very well for last couple of months, and fresh breakout is also seen on the US metal index, which is a multi-year breakout and last 10 years breakout, we can say. And if you were to look at the SAIL is trading near its 52-week high and recently surpassed the year 2021 high, which was placed at 136. So looking very strong on the chart, though the starting of this week has been muted and it is not moving that much for last 3-4 sessions, but the primary trend of the stock is quite bullish, and it is likely to do well. Not only the SAIL, but if you were to look at the entire metal space like JSW Steel, Jindal Steel, as well as the Tata Steel, all these metal stocks are performing well and looking strong on the charts, positional charts. So I would suggest that this is a good opportunity to do SIP kind of stuff in this counter, because it is likely to do well positionally, and in the coming months, coming quarters, it is likely to do well. So looks very good setup on the weekly and monthly setup, so that's very strong. A running correction could be there, and that should be utilized as a buying opportunity. So as far as support for the stock is concerned, it is placed around 135. So 135 becomes the positional support, and I'm expecting this stock to go beyond 160, 165 also in the coming week. So positionally, I am very bullish on this particular space, and as well as the entire metal index.
Alright, let's move on then and let's talk about Jyoti Structures or Jyoti CNC, and that particular counter is in focus in today's trading session. Remember, the stock is actually under pressure because it has priced its proposed rights issue at nearly 40% discount to the Friday close price. On back of that, the stock actually saw a sharp dip on an intraday basis. It's not actually Jyoti CNC, it is Jyoti Structures for you. The stock actually fell as much as 4.9% to about 23 rupees per share. That's most since March 27th. It's planning to issue about 116.4 million shares at 15 rupees per share mark to raise about 175 crore rupees. So that is Jyoti Structures for you. That is under pressure, not Jyoti CNC. That's for far from my end. But yeah, Jyoti Structures in focus, and the stock declined about 4.9%.
Okay, surely keeping an eye out on that. But that was stock number 42 and the last stock for today. So thank you so much, Vinay, Ankita, Ansh, as well as Aditya, for joining in with us this afternoon on ET Now and giving us your views in terms of what stocks have been doing as well as on the technical front. But that's all for the stocks that we have. But let's move on to an ET Now exclusive then. And we have learned from reliable sources that the new government is likely to initiate big reforms in the power sector. Discom reforms which could include fresh package of a 1 lakh crore outlay for the power sector has been drawn. Let's go across to my colleague Prakash, who's joining in with us to give us more details on this. Prakash, take it away. What's happening here in terms of the details for the power sector?
Yes, we are learning from our sources that the government is likely to announce next set of power sector reforms, especially for discoms. Sources are informing that the Power Ministry has already started working on this proposal where additional financial support would be given to the discoms, performing well based on various parameters. Sources are informing that a new proposal could be part of the first 100-day agenda of the new government. Along with that, we are also given to understand that the financial incentives under existing scheme likely to be increased to rupees 4 lakh crore from existing rupees 3 lakh crore. A very significant development coming in. Along with that, various parameters have already been identified by the Power Ministry on which discoms have to perform, and based on that the financial incentives would be given. If you look at these parameters, that is reduction in AT&C losses and the steps taken by the discoms, installation of smart metering, payment of legacy dues, overall billing collections, among others. These are the specific parameters which have been identified by the Power Ministry, and based on that the additional financial support would be given. Along with that, REC and PFC have also been informed to increase financial support to the discoms performing well. Therefore, it is good for the discoms performing well based on various parameters to get additional support from NBFC like REC and PFC. As you are aware that the government has set a target to achieve 12% AT&C losses pan-India by the year 2025. Therefore, additional financial support is likely to be given to achieve this target.
Thank you so much for that big exclusive on the power sector, Prakash. But let's move on. And IRDAI has actually expressed reservations over Hinduja Group firm IHL's Reliance Capital acquisition. Anurag Shah is here to tell us exactly what are the concerns and what's the way forward now. Anurag, over to you. What are the concerns that IRDAI has actually now expressed?
Insurance regulator IRDA has raised concern about the Hinduja Group led IIHL's takeover of Reliance Capital, and the concerns are mainly related to the breach of FDI limit in insurance space because the Reliance Capital holds 100% stake in Reliance General Insurance, Reliance Health, and 51% stake in life insurance company. So the letter written by IRDA to the administrator of Reliance Capital has mentioned these concerns. Another concern raised by IRDA is also related to the stability of financing because the most of the fund will be raised, debt will be raised, and the insurance is related to the policyholder public interest. Policyholder interest is most important in the insurance space, so regulator is worried about that also because the IIHL has more than 600 shareholders and they will raise money to fund this acquisition. So regulator has raised this concern, and another concern is related to the breach of FDI limit. Presently the Indian insurance segment allows FDI limit up to 74% only, but the proposed structure will make FDI limit reach up to the 100%. So these are the two concerns raised by the IRDA, which is the letter has been returned to the administrator in which this concern has been raised by regulator IRDA.
Thank you so much, for those details coming in there. But, with that, we're out of time on this edition of Market Fatafat. It's a goodbye from Cheryl, myself, as well as the team who put the show together.
If you like this video, then like, share and subscribe to ET Now.